So a couple things that we're going to do differently in this course compared to at least the other courses that I've taken and other folks have taken. Specifically, this course is built to address the answer to this question: how would we have liked to have been taught? Meaning, not what was easiest, not what was most palatable or produced the most sales, but what would have been the most effective way for us to learn. And, certainly not a knock on all the different schools that we've been to. It's just a difference that we're hoping, will make people successful a little bit faster. That sort of that 2-year period where you're trading, and it's a tough period to get through. You first get your experience under your belt and all those sorts of things. We'd like to shorten that up if we can. So unless anyone has any objections, we're going to go ahead and get started. Everybody ready?
Yeah.
Ready, Gecko? Good to go? Okay, great. So this is our very first one, hopefully the first of many. And this will be recorded. It'll be put up on the trading team forum. Once we're done with the class, sometimes it takes a couple of hours for WebEx to kind of digest the recording and make it available to us, and then we just have to download it and connect it up to you guys. All right, so welcome to the Basic Options 101 course. Let me get my focus in. A little bit of housekeeping we need to go through. This is not an advisory service. We are not licensed and do not get paid to give investment advice. This is for educational purposes only. You and you alone are responsible for your own investment decisions. No support is provided or implied. All trades are assumed to be paper trades. We're going to use many analogies to help explain concepts to lay people. These are not meant to represent all the technical and specific characteristics of an idea, but only meant to convey their general meaning. For some of the more experienced folks, when we give a definition for something, they might get a little bit tweaked out because it's not the exact perfect formal definition. So just wanted to be clear about that. Option trading may or may not be appropriate for you and your investment goals. Please consult your attorney, accountant, and other financial professionals, and of course your priest, pastor, all those people too. Student expectations. This is something that I wish I had heard. Options trading is a tough business, and one that you will not learn quickly or without a lot of hard work. Anyone telling you differently, you're confused or not to be trusted. I really approached options like, golly, this is just a fountain of money. You do these things, you got high probabilities. It just seems ridiculous that everyone isn't just making a ton of money at this. The more I've traded, the more I realized how tough this business is. And so I just wanted to be, very upfront about that. We're going to be direct, honest, and frank, and stick to the things that are simple and work well. Paper trading is mandatory. Do not trade live. Any money you put into the market in the beginning of your trading career will likely be lost. I only say likely because there is, a handful of people, like less than 1%, that manage not to lose all their money. In his book Outliers, Malcolm Gladwell says it takes 10,000 hours to master a craft. That sounds about right for option trading. So, think about that. 10,000 hours, that's 5 years full-time, no kidding trading, right? Really, that 10,000 hours applies to anything. So recognize that, and also be really clear that no matter how smart you are, there's not much you can do to compress 10,000 hours. 10,000 hours is 10,000 hours. It might be 8,000 for you or 15,000 for you. But just know that that experience is most important in options trading. It's not just about understanding the mechanics, but specifically about understanding the mechanics along with a disciplined approach to your trading in the face of your emotions. And that's the really tough part. Properly executed option trading can provide you and your family with a lifetime of income. Promises of the course. By the end of this course, you'll gain a strong understanding of the basics of options trading with special emphasis on trade adjustments, managing by the Greeks, and probabilities. With a solid foundation, you'll be on your way to learning how to make money in a bear market, how to invest in the stock market with less cash and less risk, and how to generate income from stock you already own. And then just some quick rules. Paper trading, again, all trades and adjustments are soon to be in paper only. Be supportive of each other. So wide diversity of experience and expertise here. There are a lot of folks that are going to be joining us as students and as coaches, and so we need to make sure that we're going to play nice with one another. You know, everybody is volunteering their time to do this, so you know, let's be good to one another. Ask lots of questions. We're working to create and support 1,000 option traders producing full-time income. So this coursework that we have, we're going to take your feedback and your questions and where things, you know, maybe mentally were difficult to understand or poorly worded, and we're going to be constantly refining this course. You know, this is, no kidding, our BHAG. We really are serious about this and are taking it on. And the biggest part, have fun. You know, I'm pretty dorky, and I love options. I think options is great fun. So, what is a stock? Most people here understand what a stock is. We're just going to spend a couple of minutes going over it. Simply put, a stock or a share of stock represents a very small piece of ownership in a company. It's kind of like slicing up a pie into a million pieces and then selling each piece to the public. So how does the price get determined for that stock? Well, depending on the public's hunger, the price will be determined by supply and demand. So if you've only got a million pieces of that pie, and you know suddenly everybody is excited about cherry pie, then the slice of that cherry pie company will continue to go up. Does that make sense? You know, you see that particularly in kind of frothy markets. You know, Google, I think, is what, at $350 a share still. You know, there's very little to support that outlook that's 333, that's anything but people being excited about the Google market. Let's see here. So here's a question: what happens if you own a bunch of slices of cherry pie and the market for cherry pie companies shoots up? Well, if you already own the stock and the price shoots up, then that's going to create paper wealth, right? That's going to mean that on paper, your slices of cherry pie are worth much more than what you paid. What happens if it collapses? Well, the exact opposite. You know, it drops to zero and you've lost your investment. With a normal pie, if there are more and more people eating it, then suddenly there are no more pieces of pie. Unlike a normal pie, when a stock goes up, each piece gets bigger and the pie keeps on growing. So it's that idea that each slice of the company represents a larger slice of the money behind it. Does that make sense to everybody? No. Here's a definition. If you own 1,000 shares or pie slices of a cherry pie company, you are long 1,000 shares. And in particular, we want to pay attention to that idea of being long. We're going to slowly introduce some vocabulary and words and concepts, and we'll be building this foundation. So if I own 10,000 shares of ExxonMobil, then I'm long 10,000 shares. If I own no shares of ExxonMobil, well, I'm not long, I'd actually be flat. Okay? Long is shorthand for saying that you own the shares and hope that the price goes up. Now, there are two things that are really important in that sentence. One is hope, which is properly a four-letter word, like all the other four-letter words, right? And two is price goes up. So typically, if you're long something, if you're a long stock, you're long because you believe that the price is either going to stay the same or go up. And really, most of the time, it's that it will go up. Okay. For most people and most companies, particularly today, that's the only way that they're going to make money is if the price of the share goes up above what they purchased it for. Some companies will give you small dividends, but even those companies are getting less and less today. If you hear someone say, I'm going to get long Microsoft, that means they're planning on buying shares of Microsoft in anticipation of the price going up. Anticipation is just a longer four-letter word for hope. Although it's possible to make money when the price of a stock goes up or down, most of the mutual funds and professional money managers are only ever long stock. Okay? If you've been around a little while, you know that you can make money in the market when the price goes up or the price goes down. If you don't understand that concept right now, particularly the downside of it, don't worry about it. We don't need it for now, and that's my little disclaimer.